Hi, I'm Scott Simmons. I'm an insurance consultant. I don't sell insurance and never accept fees or commissions from the insurance agents or insurance companies that I work with for my clients. Let's talk about bank insurance. This video covers the financial institution fraud bond, one of the 4 sections of bank insurance. The other sections are management liability insurance, standard lines of coverage, and lender asset protection insurance. See the separate videos on these areas of bank insurance. First off, you won't find the term fraud bond in general use. I coined the phrase a few years ago. The financial institution bond is the standard title. I realized that the term bond was almost meaningless. It's also the only insurance policy without a descriptor in the name. A homeowner's policy covers your house, auto insurance your car, workers' compensation insurance, well, that's obvious. What's a bond? The fraud bond protects the assets of the bank from losses by fraud. These are first-party losses to the bank caused by fraud. Lawyers are almost never involved. Losses to the bank caused by fraud, no lawsuits. Here are the coverage sections to the fraud bond. The names tell us what's covered here. Employee dishonesty coverage. Loss on premises, robbery, burglary, fire, wind, loss to your bank's money. Loss while money is in transit. The money must be in the possession of an employee or an armored car company, though. Forgery, counterfeit currency. Computer fraud, hackers, virus. Recall this is first-party coverage, loss to the assets of the bank. The fraud bond covers your money and money you are responsible for. This is not coverage for the mistakes and errors made by your customers unless you are responsible for the safekeeping of the funds. Funds transfer fraud, EFT, voice transfer, fax transfer, and computer transfer. Loss to your customer's property in safe deposit boxes. Loss of the money in an ATM machine. Stop payment liability. Kidnap, ransom, and extortion coverage. Fraud in the mortgage application process. Debit card fraud can be covered in your bond. Fraud in securities transactions. Here are a few issues to be aware of. I almost always want the same insurer for my bank's management liability and fraud bond. It makes claims easier. Make sure you don't have aggregate limits in your policy. The loss limits under a fraud bond are per loss. You don't want a policy limit in the contract. Consider separate debit card coverage. Chartis has a broad policy that has rather low deductibles. In 3 minutes, that's the financial institution's fraud bond. Most banks start their work with me in an unbiased review of their insurance. Simple and straightforward. You send me your policies and I report the issues and concerns. We then work through the mitigation of the issues. Unbiased insurance help and advice for banks. I'm glad to talk about your bank and your insurance. Call or email me, scott@scottsimmons.com, 207-284-0085.